and welcome to The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host, and I'm live today on the floor of the New York Stock Exchange with Guy Davis. He is the portfolio manager for GCI Investors. Now, as a reminder, today's episode is for informational purposes only. The NYSE does not recommend investments or investment strategies. Guy, thanks for being here.
Thanks for having me, Doug.
Now, your ETF listed here is called the Genuine Investors ETF. What does it mean for someone to be a genuine investor?
Absolutely. So for us, we make a very clear distinction between investing in a company and investing in a stock. So genuine investment to us is about being a partner with businesses, about being a partner with management teams, and really taking a long-term view on a company rather than thinking about trading a stock, kind of numbers on a screen. So we make that distinction in terms of the business itself. We also make a very clear distinction when it comes to the value, because for us, the underlying value of any business can often be very different from the price that it's trading at on the stock exchange. And that's what creates opportunities for us over the long term.
So now for the ETF itself, what makes it different?
Yes, absolutely. So I think the key thing for us is that we take a very specific view in terms of what we like and what we don't like. And we take the approach that if you and I were all of a sudden immediately billionaires and we were going to go out and invest in a portfolio of companies, there would be an enormous number of sectors that you and I would not go anywhere near. We have a preference in our strategy for as few things to forecast as possible and as few things to go wrong as possible. Kind of thing that you and I would do if we were approaching this ourselves personally. So as a result, there are a small number of sectors that I would say are fundamentally very attractive for long-term investing. Things like cell phone towers, things like industrial gases. There are a number of sectors we simply stay away from. Just because they're in the index, for us, doesn't mean we need to have any exposure to them. So I would take an example of something like energy companies. We hold no energy companies within the portfolio on the basis that for us to be able to get energy companies right, we would really need to be able to forecast commodity prices. I don't think we have any ability to forecast commodity prices. So if we can't forecast the biggest driver of returns of a company, really we have no business investing there. I would say the same about pharma companies, biotech companies. Things that are very heavily reliant on regulatory approvals. It's incredibly difficult for us to have any real confidence in what's going to be approved and what's not going to be approved. We want things where we have a very high degree of likelihood of success, or another way to think about it is a very small likelihood of getting things significantly wrong. You know, investing in general, everything we're doing is making an estimate, making a forecast about the future. The fewer forecasts and estimates that we need to make, the less chance we have of being wrong. So from our perspective, we're looking for those companies and those industries where we can have a very high degree of confidence in how the underlying industry is going to play out, and a very high degree of confidence in where the value is going to accrue in terms of specific companies.
So if we stay on that point, are there specific companies or specific industries that your ETF is actually investing in?
Yes, yeah, absolutely. So I mentioned cell towers briefly earlier. I think as an industry for kind of long-term investment, it's one of the greatest that exists around us. If you think, you know, today, we could not really construct a scenario where as a globe we consume less mobile data next year than we did this year. And that's a trend that's going to keep going for 5 or 10 years. There's nothing that can disrupt that. COVID, politics, regulation, we're going to keep consuming more and more data. That creates an enormous amount of opportunities for investment, and a huge amount of value is going to be created in that industry over the next 10 years. Now, if you look at the industry and the way we typically think about it is we take something like that really long-term trend and we break it down into a value chain. And we say, okay, who are the people who are going to stand to benefit? We could say the telco providers, AT&T and Verizon. The way we look at it, they're very heavily regulated, don't really have a huge amount of control over their own returns. You could pick chipset manufacturers, you could pick handset manufacturers. There's all these different people who exist in the ecosystem. If you work through that value chain, you pretty quickly get to the point that there is a real bottleneck when it comes to the towers. We physically do not have enough towers in the United States or globally to carry the amount of data that we're going to need. So the ones that exist are incredibly valuable assets. And then, you know, for us as a reasonably small research team, I often say to people, there's no need for us to have a giant research team, because with that kind of high level thinking, we've maximized our chance of success. And there's only 3 or 4 listed tower companies that we need to look at. So things like that, absolutely wonderful for us. We can have a very high degree of confidence in what's going to happen in the underlying industry, very high degree of confidence in the underlying company, and we don't need to be involved in forecasting where stock prices are going to go, where interest rates are going to go, macro memes, all of that. We don't need to worry about any of that.
And to learn more, your website is?
GenuineInvestorsETF.com.
GenuineInvestorsETF.com. Now, as a reminder, if you caught this episode live and you're looking for more ETF thought leadership, please visit our website. That's homeofetfs.com. Home ETFs.com. We're live from the floor of the New York Stock Exchange, the corner of Wall and Broad Streets, the home of ETFs.